We have with us today Atul Suri, CEO of Marathon Trends PMS. Atul, great to speak with you here on NDTV Profit, and good day to speak with you as well when there is such a bullish outlook that has come from Morgan Stanley vis-a-vis India. India has topped China on the MSCI EMI index. Just wanted to get your thoughts at a time when the question and the refrain is, are we overvalued? Is the bull run overstretched?
See, that has been a worry for the last few months, and the market continues to surprise on the upside. In fact, what you will notice is that even when globally markets correct, India corrects less. Let's take the last month only, when we had this whole yen carry trade issue. The Japanese market swung 26%, the US was down 9.5%, India at best fell 4.5%. So what happens is that India is showing immense downside resilience. Not only is it going up faster or breaking out early, it is also showing immense downside resilience. And I place a lot more emphasis on downside resilience. You know, in a bull market, an up-moving trend, sometimes froth can be faster or can rise higher. But when markets correct, as I saw last month and I discussed of this yen carry trade, India fell less. So I don't feel that it is all frothy. We have immense strength at lower levels. And after this Morgan Stanley report, you know, what you'll realize is that, okay, it's not going to result in FI flows immediately, but the case for India becomes stronger. The case for ignoring India for far too long also becomes less. And just as the FIs feel valuations have run up or India is expensive, but as and when India corrects, we know that apart from domestics, we also have this very large FI flows which are waiting to be deployed. The important part of reports like this is that you cannot be ignored for far too long. As an economy, we've already, knocking at the top three. And as a market also, I think we'll have to get used to surmounting many such hurdles and benchmarks and accept it. And the only thing is that trying to find the top and finding it's overvalued, is something which I have rarely found people get it right. As the line goes that more money is spent waiting for a correction rather than a correction itself. And I have seen people waiting for the last 6 months, and maybe they may have to wait for next few months also.
Atul, morning, Neeraj here. So whether we become the large EM in a month's time, 2 months' time or longer, I think you made a very important point about how India can't be ignored. The contra that people might say, oh, the most expensive EM, how can money come in? But we are looking at a rate easing cycle in the US, which typically leads to flows into emerging markets. You think despite the valuations, both passive and active flows, coupled with the fact that if we become the highest EM, that will also draw. So you think, or do you think that we are set for inflows over the course of the next 6 to 12 months from the global investors?
See, it's difficult to, guess or give it a time frame because the variables and what they are thinking is tremendous. But what my logic is that, if our weightage in the EMs goes up, even globally, our weightage goes up. When you're a very small market with a decimal allocation, you can be ignored. You can be called a rounding error. But when your allocation becomes a larger number and when you move and the market, the overall index gets reflected or starts getting pushed because of that, you can't be ignored. Let me give you an example. Like in the Indian market, HDFC Bank or Reliance. Now, if HDFC Bank and Reliance start moving and a fund manager is not holding it, they will be forced to buy it simply because they are important components. I'm not saying India is the largest component, but once we become of some size where we cannot be ignored, then by default, whether you like the valuations or no, you will have to allocate. So the important part is that we move away from just a rounding error, a decimal rounding error, to an asset class or an important play. And as I said, that we are going to surmount many such milestones in this journey. And this is just one of them. So immediately it will not result in action, but it cements our overall position of strength globally in markets.
Also, Samina joining in, and you talk about how we are in a long-term structural growth story. In the last 15-20 years, Indian markets have tripled. And of course, looking ahead, there's some nervousness, there's some optimism. Where do you feel the leadership will come from? The last 2 to 3 years have been about broader markets, The large cap space has been conspicuous by its absence. Do you feel the next leg of the rally could come in from the heavyweights, and that also means that the bias of a portfolio should be to large cap names?
Yes, large caps from history are at a disadvantage compared to small caps, and they do pull back. We know that these things happen. But I would look at it from a more interesting observation that I have in recent months. Is that in the last 2-3 months, I feel that leadership in the market is changing. See, the market was dominated by PSU stocks, or you will see that the market was dominated by the capital good engineering. But what I'm noticing in the last 2 to 3 months, that 3 new themes are emerging and very strong. First and foremost is pharma. Pharma is a sector that's been ignored for years, but it's a very large segment. And even if you go and see the new lifetime highs or 52-week highs, you'll find that pharma stocks are pretty much, very much dominating that list. So that gives me a sense that this sector is going to be a good catch-up play. The second sector, which is very important, is IT. Barring the volatility in NASDAQ on a day-to-day basis, but you'll find a lot of IT stocks also reflecting that kind of move. And third is consumption, more on the discretionary side. So I feel that these 3 themes are emerging. It is important that a broader market needs to participate. It cannot be just PSUs and cap goods. These sectors were ignored. They need to do a catch-up. So I think it's very, very important for the overall breadth of the market that more and more sectors participate. These 3 sectors are very big. They're important. They're heavyweight. And I feel that if they do the catch-up, it will be great. And yes, as a summation to that, a lot of large cap stocks are prevalent in these 3 sectors. And that is why you may see that there is also a large cap happening, because there's a fair amount of representation of large cap stocks in these 3 sectors.
I noticed you didn't mention banks. And that is one space that is significant in the large cap. And I know you don't like banks either. So you want to talk to me about what happens to banks and what happens to financials, which are clearly behaving separately.
So the fact is that banks have been my underweight in my PMS for the last some years, and I continue to remain underweight banks. It's very different narrative compared to financials. Now, what I'm noticing is that we club banks and financials in one line or one word, but the fact is that financials are behaving very different from how banks are behaving. And yes, banks will catch up. It's not that they are going to lag the market by a big way. But as a trend investor, my job is to find leadership. And just as I mentioned the 3 sectors earlier, I feel that financials is another great sector. So you look at some of the AMC stocks, some of the broking stocks, some of the insurance stocks, a lot of the NBFCs, they also are breaking to lifetime highs. So in my fund, as I'm positioned, I'm underweight banks, but I'm overweight financials. And I think that they are, as I said, termed or clubbed together, but honestly, they're behaving very differently, and they're both giving me different opportunities in the market.
What about the whole play on consumption? Now, rural consumption is set to rebound. There are already green shoots there. But the play so far has been very focused on discretionary consumption. So hence you see, for example, Zomato becoming, the darling of the street, etc. Do you like that kind of a play? Any view on a Zomato and the larger consumption story?
See, I won't speak on specific stocks due to regulation. But as I said, discretionary consumption is standing out. And I think that this is, as I said, we have to get used to it as a country. As the GDP grows, the per capita grows, discretionary consumption will improve. And I think this is again a part of a larger play that is happening. Yes, wherever there is a digital angle in terms of delivery, definitely it will be favored, because as a country we have adopted digitization at the mass level very, very successfully. And I think that this is again one of the many more hurdles that we will overcome, and we just need to get used to it.
Atul, final question from my end really, and that is on themes that have been the center stage of the last 2 or 3 years. Fundamentally, power, for example. Such a powerful rally, targets are very stiff. Is power in the right quadrant in addition to the themes that you just mentioned?
Yes, power is in the right quadrant, and I feel that some of the alternative energies, renewables, are still looking very good in spite of having run up. And the fact is that, I mentioned PSUs, whether it's defense stocks, power, energy. It's not that the story is turned. It's just that they need to rest. They've run very hard contrary to everyone's expectations for the last 2.5 years. As a runner, you cannot be leading the pack all through. You need to conserve your energy. You need to run the marathon. So I feel that these are ultimately the marathon stocks. But they need to rest. They need to conserve energy. And the rest of the field does catch up. So I feel that it is nothing but the broadening of the market. And that is very, very important, because if the market is standing on just one or two legs, it can fall very badly when those legs give up. When the legs get more, the run can be longer. So what I'm happy about is the broadening of the sectorial breadth, which means that this rally has more legs. That means that this marathon has a lot more distance to cover.
Marathon analogy. Auto stocks in this marathon, are they zooming? Like, do you see Usain Bolt speed, or are they going to be slow and steady?
I think that they have done very well, and there will be some that will stand out. I think that the themes are a little more divergent at the moment. Not all auto stocks give you that level of confidence. Some do. So I think that the screen tells you where there is strength and where there is weakness. So it's not an across the board for autos, but selectively some still continue to perform and do very well.